As the bear market drags on and the markets continue to look, well, totally rubbish, there are an increasing amount of calls for Bitcoin to go all the way down to $10,000. But is that actually realistic? Can Bitcoin actually go so low? And if so, well, how does that actually happen? How does such a mega nuke really take place? And what are the factors that would prevent further price decline for Bitcoin? Well, I want to discuss all of that with you and more in today's video. My name's Lark. I make videos talking about investing. Now, if you do enjoy that topic, like learning about crypto investing, staying up to date with what is happening in the space, then do please subscribe to the channel. And if you take a little quick second to tap on that thumbs up button, I would massively appreciate that. Let's get into this topic. First, let's just go to the charts. Can Bitcoin go down to $10,000? Where does such a crazy idea even come from? Well, it comes from history. You see, in the last major Bitcoin bear market, the price went down by around 85% from the peak down to the trough. Both previous times, this actually took a little over a year to hit this low. Right now, Bitcoin's only around 220 or so days into this current bear cycle. If you're counting from $69,000, if you're counting from $65,000, well, we're actually much closer to that bottom scenario. Anyway, does this mean that this is what is going to happen again? Minus 85%, for sure. Well, maybe. But also keep in mind that this current bear market has broken most of our historical modeling. For example, we never traded under the previous all-time high before. That's exactly what's happened over the last couple weeks. We never closed weekly candles under the 200-week moving average before, and yet that's what's happened. And we have never had such a rough monthly candle with Bitcoin finishing the month down around 40 freaking%. The worst monthly candle ever for Bitcoin. Ouch. Look, maybe we don't drop 85% this time. Historical models are broken, and that is a historical model too. Because to an extent, this time is indeed different. But we always have to remember past performance does not indicate future performance, as we like to say. So just because it happened once doesn't mean it's going to happen again. Happened twice doesn't mean it's going to happen again. Perhaps instead of fearing $10,000, we should actually focus our attention on the bottom trend line that has been forming up since 2017. Maybe that is a more useful level to be looking at as a potential blowout bottom for a predictive tool. That would indicate that the lows would actually come in around $15,000 for Bitcoin. Still a big drop from our current prices, but maybe not as scary and devastating as a drop down to $10,000. When the bottom is finally printed for Bitcoin, and assuming that it has not yet happened, well, then that is when we enter into the Valley of Despair, which, as the name implies, is really not such a super fun place. Now, this is the period after the ripping off of the Band-Aid, when the pain continues to just fester. Basically, we move sideways for months on end. This is when a lot of people are simply going to pack up and leave. That being said, we maybe are already entering into this period. Let me show you this. This is the Wall Street cheat sheet for Bitcoin bears. Now, at what stage do you think we currently are on this chart? Do you think we're closer to the thrill phase for bears, the euphoria phase for bears, the complacency stage for bears? Keep in mind, the last few weeks have literally been the worst weeks ever, price action-wise, for Bitcoin. We broke all the historical modeling, record losses, mass capitulation. My guess is that the bears are getting just a little bit too cocky these days. Might be time for some humble pie to be served to those bears soon. I also want to share this chart with you from the rational root. It shows basically broad capitulation right across the Bitcoin space. Both short and long-term holders throwing in the towel, as the root pointed out. There could actually be a lot more days of capitulation still to come for Bitcoin. But most often, we see the most painful price action right at the start of the capitulation period. We tend to have a massive blow off and then, recovery after that, slow but sure. This is also more evidence too to show that people are giving up during our valley of despair phase. Capitulation continues to happen. Let me just break the flow real quick as well before we get into talking about the miners and the whales. Very important equation. Just to mention the newsletter. Every week my team and I write an amazing newsletter. It's called Wealth Mastery. We talk about DeFi, we talk about NFTs, we talk about altcoins, airdrops, token sales, ways to make money in spite of the current market conditions. We share all of the latest industry insights with you twice weekly to your inbox. So stop missing out. Our subscribers love it. You will too. You can actually sign up for free using the link in the description. So go ahead and check it out. Now, let's get back into this. So let's talk about the Bitcoin miners. One of the big worries you see right now are people going, oh my gosh, the miners are going to sell. This could be a big catalyst to send the price just plummeting downwards. And we do see miners selling again. Miners have been selling into weakness right now. This chart shows that through most of the crash, miners have been unloading Bitcoin. We even have reports of mining companies like Compass Mining unable to pay their electricity bills, top management from the company resigning. Not good. But miners actually don't control that much of the Bitcoin supply right now, only around 50 to 60,000 Bitcoin. So the fear factor is not so big in my opinion. Right now they're selling a few thousand Bitcoin a month, and even though they have more to sell, a lot of those miners don't need to sell that. And meanwhile, you need to look at this. Bitcoin whales have added 140,000 Bitcoin to their holdings in the last month. That's way more than the miners have sold. Even small retail investors have added more than 36,000 Bitcoin in the last month, which is like 10 times the amount of Bitcoin the miners have sold. This far exceeds any dumps happening by the miners right now. But all that being said, we could still be in for a rough July for the following reasons, and not actually super crypto related when it comes down to it. In fact, we could actually be nearing an end to the crypto contagion phase with Three Arrows Capital and the big crypto lenders like BlockFi and Celsius and all this craziness going on, all the leverage being washed out, and many of the bad loans from those centralized lenders actually already being liquidated and getting into default. As JP Morgan analysts actually pointed out, the crypto deleveraging cycle probably won't be too long, mainly due to a lot of it already being washed out. We also have the companies like FTX bailing out companies like BlockFi. So that's all kind of going on. Also, the continued massive flows of venture capital continuing to come into the space show that crypto is far from dead. Literally, we have a situation right now where we have regular announcements of like new $100 million or multi-$100 million mega funds investing in crypto announced all the time. Anyway, so that's not our problem. Our problem continues to be the damn macro scene. And I know, broken record Lark at it again, but it's true. All eyes will be on the inflation data coming out on July 13th. Did inflation increase in the month of June? And of course, in the Fed meeting on July 26th. Right now, many people are thinking that the Fed is raising rates too fast and too hard, and that this is going to lead to a recession in the USA, which obviously, global economic engine. And if a recession is confirmed, well, then hold on to your butts, because $10,000 Bitcoin might come real hard and real fast in that situation, as basically all bets are off. But is there a light at the end of the tunnel? Well, as mentioned earlier this week, I think there is. Commodity prices have actually started to come down a lot already. Oil's down like 10, 15%, something like that. Wheat's down like 33%. And that's starting to have a ripple effect. For example, the cost to ship a container from Shanghai to LA has fallen by 38%. Now that is a huge decrease in shipping costs. That has ripple effects right across the board for prices that consumers end up paying. And with commodity prices falling, retailers overstocked, needing to dump supply, which will happen at a discount, we come back to the inflation numbers for June. So all those commodity prices falling during the month of June. 2 weeks' time, we have the inflation numbers released. Now, if inflation numbers fall, good chance that could happen, then expect markets to start staging at least a relief rally. If inflation rises, fast, sharp pain, ouch. Be ready for that too. Either way though, we still have to wait for the Fed meeting at the end of the month for a better sense of direction on the markets. If inflation falls, and the Fed only raises rates by like 0.5% instead of 0.75% like they did last month, the markets should really like that. If inflation rises and the Fed raises rates again by 0.75%, then things could get real ugly, real ugly. It just shows that things are out of control. Fed's not able to rein it in yet, so prepare for that scenario as well. Anyway, just my 2 Satoshis. What are your thoughts on all of this? Do you think those people calling for $10,000 Bitcoin, is it rational? Is it reasonable? Is it too bearish? Just bearish enough? Or maybe the bottom's already in and we're gonna pump from here. Inflation's gonna come down, Fed's gonna slow down the rate raises, and back to some kind of market recovery in the near-term future. Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.